Special announcement, everybody. We will be launching our free newsletter, Viral Bites. And what's going to be inside Viral Bites? I think number one, it'll be our lessons. Then number two, what are the resources that we are consuming right now? Podcasts, obscure podcasts that is super, super interesting, super valuable. We're going to share with you our lessons from there and, of course, the links as well. What other things are we going to share?
Maybe some of our personal stories that we have gone through,
Yeah.
whether is it investing or whether is it health or
Yeah.
whatsoever thing that we discovered that is interesting, or values that we think that it's important for you to have as an investor, and it's based on our own personal experience, and we share it inside the newsletter. It's not going to be like those very, very news heavy, very, very theoretical. It's all going to be a practical kind of like lessons and insight that you can learn just by reading our newsletter.
No basic stuff.
Yeah, no basic stuff.
No boring basic stuff.
Yes, exactly.
So anyways, in conjunction with this announcement, we want to share with you some of the top lessons, especially from Jonathan. I'll chime in as well. Some of the top lessons that we've learned over the past 4 years.
Yeah. Is it 4 years?
4 years.
8 years, I think. 7 years?
7 years?
Yeah.
For me, it's almost a decade. So combined nearly 2 decades, you can say. Number one is greed. So this is actually a success story for mine. So maybe you can share like, why isn't this a success story for you?
Yeah, okay. So this was where I first made my very first multi-baggers, and also I lost it all also. So yeah, number one is Supermax. This story I actually share it in the newsletter. So if you want to know the entire context, make sure to register yourself and see it for yourself. But yeah, how I came across Supermax was I was watching some of the live streams on Facebook lah, and there's like some random guru talk about glove.
Okay.
So that actually got me intrigued because whatever he said sounds so convincing. So I was thinking that okay, I think glove is a stock that I need to buy, especially Supermax, because it was specifically mentioned, right? So I sold back then it was Capital A. It was A Asia before it was called Capital A. I sold it at a 45% loss. Then I went and bought heavy on Supermax at around like as you can see at the timeline is over here lah. If I can recall correctly, pre-bonus was around was it 5 ringgit, 4 ringgit,
Okay.
5 ringgit, yeah, per share like that. But yeah, so I ride the boom. I actually managed to almost 3x my. Actually did 3x at one point, but I was quite greedy lah, because my thinking was back then, it was in 2021. I was thinking, the shortage is still going to last. The oversupply will come in 2023 or maybe even late 2022. And this, what makes me so convinced is also because I was watching the live streamer again, the same guru again. And then he was like, he's trying to calm everyone. He's just saying that, Supermax TP 30 ringgit. Then I was thinking, okay lah, trust him lah. So I hold on my baggage and I held it until it went down, not 38%, but 34%. So that's where I realized that, you know what, things are not going to turn around. So thankfully, I cut loss at the 34%. Because if I were to held, I could have lost 70 to 80% of the money.
So the big lesson here is that you just got greedy, right?
Yeah, I got greedy.
And of course, you weren't as educated back then.
Yes, exactly. Yeah.
So for me, this is a success story. In fact, too busy to find stock ideas? Check out Viral Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. This was your first year of investing, right?
Actually, it's my second or third year. But back then, I wasn't really investing. I was trading.
So if I was in a similar situation as yours, I probably would have made the same mistake. But for me, it was success. And the learning lesson here is actually to take advantage of greed, funny enough. So the thing is, I got into Supermax in late 2019. Not because, even though at that point in time, people were already talking about COVID, the pandemic, right? But at that point in time, it wasn't a lockdown, nothing. People were just saying, it's just another flu, right? So the reason I bought it was because it was statistically cheaper than the rest. The other three, Hartalega, Kosan, and Top Glove, right? Yeah. Now, of course, I didn't do as much research as I could have. Later, I found out the reason was because they have their own branding. Yeah,
own brand.
So Anyways, so I got in, and the total gains were like in terms of percentage 4 times. But from my first buy to my last sell, it was 11 times. So what did I learn here? The first thing is I put into practice a concept that I go deep into with SIB, our education program. But in essence, one of the best things you can learn as an investor is to average up, not average down, actually. I mean, yes, averaging down is good when it's a good company. But if you think about it, good companies over time will average, you will go up more often than it goes down, which means statistically, you ought to be in a position where you can average up, where you need to average up more than you average down.
Yeah.
Okay, is that too much to handle? Just pause and hear me say again. It runs contrary to a lot of typical investment wisdom, but my experience has been this very useful. Now, I'll tell you why. People buy something and then they have like a target price or like some sort of level that they won't sell. Or when they say there is a greed in the market. Now, when I bought it here, there was no greed for sure. COVID came, bang, right? You could see a lot of greed. So probably around here. On the way up, I added positions. Did it blow past where I think Supermax was worth? Absolutely. It's definitely not worth it. And like you said, everyone already knew like it's temporary. How can it be the case? I'm not sure. Yeah, at the point in time, China's coming in, Inco, who else?
Yeah, Blue Seal.
Right, Blue Sail. But what I realized is, if you go follow strictly on like your intrinsic value assessment, you cannot take advantage of human psychology. So because I was able to average up, which in it of itself is, I would say, is my strength as an investor. I don't mind, and you know this, right? I buy higher prices all the time. So it went up. Then the minute I see signs of weakness, then that's where I sell in batches. So I don't go all in, right? So I give myself space to be able to average up. At the same time, when I exit, I don't exit all. So I probably exit somewhere around here, so slightly under 10. So overall, it was a 4x gain.
Wow.
This is a big tip that I can share with people. You don't get opportunities like this. In fact, I would bet that I will not get an opportunity like this ever, because this is such a unique event.
Yeah, so that's greed. Second one is desperate over here. Okay, so funny thing, this is actually after I have lost money in Supermax. So,
Then this is when you came to Fire already, right?
yeah, this is actually
And you did a video on Maybach as well.
Yeah, Maybach, and I was quite optimistic also. Reason also is because I was reading this research paper by John Choi's paper also on Maybach. But then he did his research very early already, so I read it late. But his thesis was quite sound because if you didn't know, Maybach is they operate those dry bulk.
It's owned by Robert Kwok, right?
Yeah, Robert Kwok. So what happened was that back then there was a supply chain disruption, and then all the freight rates were actually at all-time high, especially for dry bulk.
So they decided to sell, right?
Yeah.
Some of the vessels.
Yes. Yeah. So that is actually the risk that I foresaw, but I thought it was okay. Yeah. So basically, when freight rates were actually going up, right, obviously your revenue profits will be improving. So what did Maybach did was the opposite. Instead of just continuing doing their freight services, they actually
sell their asset.
they sell their asset, their core asset actually back then. So from 12 vessels become 8, from 8 become 5, from 5 become 3. And back then I was still thinking that they are still going to be making a decent amount of profit from the disposal of these vessels. But obviously the market disagreed with me, and I actually initially made a 20% gain. And I was so happy. I was like thinking, okay, this is the right thing. I can just wait for it to 2x. But the market decided to correct it down another 20%, and that's where I actually lost. And I thankfully also I cut loss at that point of time. So actually I'm not sure why, but then somehow when I was at my low and I was thinking that this thesis is wrong, right? I dare to cut instead of just like holding on.
Yeah,
to my
that was a
conviction.
good thing. Yeah.
Yeah, so that actually is one of the traits that I didn't know that I have back then also. But yeah, I just cut my 20% loss, and why this is desperate is because I was desperately wanting to recoup back my losses that I made from Supermax. So yeah, that got me to bought into Maybach. And this is my another second, I would say, temperament that I need to work on. Thankfully, right now I'm actually.
And I think they would have It would have been better if they paid out some of the money, right?
Yeah,
as
yeah,
dividends,
yeah.
but they didn't.
They did a little bit,
But
not entirely. Yeah, not.
I think that's one big lesson here, but that I personally learned, not through Maybach but others as well, is that you can find a company that's cheap, because at that point in time when they sold, do you remember how much cash they have versus the market cap?
It's not a lot lah. It's not a lot. Probably like maybe 30%.
30%.
30-50%.
Okay, so it would have been good if they decide to
pay out. Yes.
pay out or pay the dividends, but they
Yeah.
didn't. And so in Malaysia specifically, because share buybacks are not really a thing, dividends are very important. If the management does not want to pay out dividends or increase long-term dividends, then it doesn't really matter how much cash the company has, or it doesn't matter how statistically undervalued the company is. Nothing's going to happen.
Yeah. And also back then they didn't mention this, but they were diversifying their business. That's why over time you see why the share price declined,
so
right?
There you go.
Yeah, they are keeping their cash for the other businesses. The last one over here, there's no chart over here. I back then when I was first starting out, I trade a lot also.
Yeah.
Day trade, swing trade, whatever trade you can name it. And I was aiming for a lot of instant gratification. I just like to see when on that day when I made a trade and I make money.
Yeah.
So yeah, it was kind of like
One of the worst
dopamine,
ideas for 99.9% of people, not all, but 99% of people, is to trade for income.
Yeah.
That is one of the worst. I want to make 10,000 ringgit a month with a 10K capital. You have to double every month. I wish I could find an investment that can double every month.
Yeah.
And I'll be a billionaire in 30 days.
Yeah. Yeah, so that is the blue sky scenario.
Sorry, double every month. So 30 months, sorry.
Yeah. So that's the blue sky scenario. And what happened to me was that initially I have a few consistent profit in terms of my day trading. But then I start to get greedy. When that one day I made 300, I was thinking that, you know what? What's 300 ringgit? Let's try to make 1K. Then my 300 ringgit become 500 ringgit. Then suddenly become 300 ringgit. Then I was like thinking, no, I lost it. I need to make it back
Make
again.
it back. Yeah.
Make it back
Revenge
again.
trade. Yeah.
Yeah, then from the 300 ringgit become negative 300. Then negative 300 become negative 600. So that is always the end game for day traders.
I mean, we've shared this before, right? The distribution curve for returns, where the S&P 500, right? You make 2%, more than 2%, was it? 80% of the time, I remember we're making.
More than 2%, yeah.
Right? Something like that.
Yeah,
so
that.
basically, you only make more than 2%, like 20% of the time. So 80% of the time, you're making 2% less. Too busy to find stock ideas? Check out Fiverr Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
Yeah, so that's instant gratification, which I believe 90% of you who watching this may have gone through this as well. Yeah, so the truth here, hard truth for you, it is that in investing, you definitely lose money, especially if you are a beginner to this. It is something very new for you. But it is part of the process. It's not like stock investing is a scam and you should just quit because you lost money, right? It's actually a lesson and also a journey for you to learn what sort of things that you are missing out. Whether is it your emotion wasn't in a place, or was it because you didn't research properly?
Well, one thing I noticed among a lot of retail investors, and we have a common friend, Hitroy, right? I see some of our comment section in one of our later videos, which honestly, it just shows how embarrassing the investor education level is in Malaysia. When people say like, because she lost like 100K, they say, oh, if you're good, you wouldn't lose 100K. Like,
yeah.
Warren Buffett lost 400 over million on his Tesco investment. So if she is not good because she lost 100K, then what's Warren Buffett? Yeah, but you know what? You're good, right? So anyways, like the way we and we are all, most of our viewers are Asians, so the way we are born and raised to look at failure is very, what's the word? It's bad. But I think what needs to adjust there is to not see failure as bad, or to see most failure as not bad, to see it as a growth opportunity. That's it. Meaning it's just the world, the stock market telling you that this is the wrong path. Therefore, let's find a new one, right? It's not a signal to give up. Right?
Yep.
If you fall down playing sports, doesn't mean, oh, don't play sports. right? Because it's part of failure, right? It's part of the
process.
process.
Yeah.
Now, I want to emphasize that specifically for money, there are failures, and big failure comes when you actually risk all you have for something that you don't need, right? So when you're trying to do the revenge trade and things like that, that's failure. So that needs to be avoided.
Yeah.
But by and large, losing money after you have implemented a good process, you just see it as, okay, now how do I adjust? But never do something that takes you out of the market totally.
Yeah. So that's money. Definitely once you lose money, you also start to affect your emotions, right? So that is where you also need to be very careful, because when you see money just moving up and down in your trading account, right, definitely you feel good and bad at the same
Yep.
time. So the only way to avoid getting emotionally affected is just by not looking at your stocks. And better yet, if you are actually investing it for the long term, and as long as you're buying the right companies.
Pro tip, if you're the sort that gets affected, trade at night. Key in your trades at night when the market is not open, so you don't see the prices that keep moving.
Yeah. And the third point, this one I think is a very key thing, is because when you feel good, right, oftentimes you would like think a lot of stupid thoughts. So what are the stupid thoughts? For example, you can quit your job already and do trading full time. Yeah. Or, you just feel like you are the top of the world and you're better than everyone else. So when you start to feel good, right, oftentimes, right, what comes after that is things will start to humble you one. So whether is it you start to lose money, or your strategist doesn't work. So when you feel good, you need to pause for a while and just think that, hey, is it really that you are good, or is it because you are lucky that you got it at the right time? And yeah, I just need to be grateful that you managed to get it at such a low price, and don't be greedy or overconfident just because you made the right bet. So yeah, always need to stay humble, and just stay humble and stay humility. Yeah. So my few lessons over here is, number one, definitely is temperament. Obviously, you see the two mistakes that I made was greed and desperate. These are coming from temperament. And Warren Buffett said this is that the most important quality for an investor is temperament, and it's not the intellect. So which means you need to control your emotions in order to stay invested in the market, and obviously hopefully your returns will be better. And also there's another statistics, or actually research done by Fidelity. They say that the best performing portfolio managers are those who are deceased, those who are the dead. Yeah, so that's another thing that you need to know. And the second thing is that you want to buy what you understand best. This is something that we preach a lot in the Fire Pro group as well. Don't invest in things that you cannot understand. Just because the company just went up doesn't mean that you have to join the bandwagon and invest in it. Because if you are investing in things that you don't understand, obviously when you see share price starts to go down, you panic. Most of the time you definitely panic, and you do decisions that are irrational. For example, just selling it just because the share price went down, and it's nothing to do with the business. The third point over here is scenario analysis. Everybody was always thinking about what is the blue sky, what is the bullish, what's the target price, but nobody actually think about what is the worst case scenario. So I think this is one of the key thing that investors always forget or ignore about. Obviously, if you take care of the downside, your margin of safety will definitely be better, because that's just the bearish case, right, of what can happen to a company. So once you know what is the worst case scenario, and then you reverse calculate and see whether at current price whether at this price is it factoring in the worst case scenario. If it is, then probably this company is actually at a very undervalued state. So this is a very underrated approach that not many investors are applying for, at least for Malaysia, because we are seeing a lot of target prices, and people just want to know whether this company can 2x or 3x. So yeah, that's the third. You need to know the worst case scenario. The fourth one, which is ironically what saved me, even though I have like bad temperament, is you need to cut loss, and you just need to bite the bullet and just
so for this, I think the important part here is to avoid the mentality that if you have a stock that is down, and then you say, I'm going to wait until it goes back to my original price, then I sell it.
Yeah.
It's very common. Very bad. Because what happens is, it may never happen. It will keep going down. I think a lot of glove shareholders know what I'm talking about. And number two, when it goes back up to your original price, will you not agree there's a good chance you will say to yourself, it will go up some more. And here you go. You've not learned, right, from this mistake. So if you're wrong, you just cut it. And let's say if it does go back up, just talk to your friends and say, you know what, it is what it is. Move on. There's a lot of other opportunities.
Yeah. This one also, there's a meme on those short-term traders that when they buy things and then they are losing money, then they say, you know what, I'm a long-term trader right now.
Yeah.
Long-term investor
Long-term
right now.
investor, yeah.
Changing the cap right now. Yeah, so that's a funny thing. Okay, the last one, which is might trigger someone or might be controversial for you, it is diversification wouldn't make you rich. This is actually a fact because if you diversify your wealth, definitely
At the beginning,
at the
especially.
beginning, definitely it will be harder for you to compound your wealth or magnify your wealth for that matter of fact. The reason is because diversification means you don't know what you're investing. Obviously, you are trying to reduce or spread your risk across to different companies. And if you spread out a lot of things, right, it will actually reduce your returns significantly if let's say you are investing in things that you don't know. So that's why also Buffett did mention that diversification is for those who...
Ignorant.
Is for the ignorant.
Protection for ignorance. So,
Yes.
but I think important to understand that quote as well is that sometimes we are ignorant. So, too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. To develop as a better investor, what I typically recommend, if you want to go straight into being a concentrated investor, you can start straight away. But you have to realize that ignorance and diversifications are opposite. They are, inverted correlation, or they should be. So the less you know, the more you diversify. So it's a spectrum. What I recommend practically is when you're starting out, you are the most ignorant, right? And you can read all the books and all that to reduce that a little bit, but experience will be the best teacher. So one way to go about it, you actually diversify at the start of your journey. And then as the months go by, as the years goes by, because you develop and you learn more, then you start becoming more concentrated. And if you do it very well, you get rich fast. Then you got a lot of money. Then you can decide whether you want to diversify or not. This is a trend you see with a lot of the billionaires, right? They made money from some small stocks. They concentrate, blah, blah, blah. And then suddenly now they just own the S&P components.
Yeah. And it's also a lesson for you that, most of the financial educators on YouTube, they are saying that you need to have 7 to 8 income streams.
The reason you need 7 income streams is because you're bad at one.
Yeah, exactly. So most...
Do you think a top doctor needs 7 income streams?
They just need one. Yeah, so that's about it for my today's lesson. I hope you guys learned a bunch for today's video. And also, if you want to know more on podcasts and books that we are reading and even our live lessons, you can check out our newsletter. Make sure to download it. I keep saying download, but actually you can just register it.
Yep.
Register. The links will be in the description and comments down below.
Okay, we are having a price increase for Fire Pro at the end of October. It'll go from 557 to 597 US dollars. And of course, now the ringgit is pretty strong. So if you want to take advantage of these two catalysts, you can say, now's the time. Fire Pro portfolio is also up as well as the boring portfolio. Not too bad, thanks to some China stocks. And if you want to get a taste, we have a free sample section that you can click on and get a sense of what it looks like inside. So guys, thank you. See you in the next video.